Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge, and we are seeing this damn stock market is so strong. It's so irritating because I only took a portion of my profits off the table this morning, and I should have taken a lot more. I mean, I'm sitting here looking at equities. I knew the bond market would, pull back a little bit on yields. Actually, let's go over here. So I figured this would happen. I figured we get a little bit of a pullback on yields, but I mean, look at equities. It is really just silly. It's just here's the S&P. I mean, just ripping back like it's crazy. Anyway, so we just, the market opens in about 15 minutes. It's to me, it feels kind of like and look at, this is the S&P this is spike after the non-farm payroll. We've gone up 1.5% in the S&P since the lows following the non-farm payrolls. That's just crazy. The thing is if you go over to the hourly, we broke out of this, this triangle. So now we're just retesting the underside of the triangle right now. So I wouldn't get carried away at this point, but it's just like, man, there's like zero follow through, and it's extremely irritating. As a trader, you're like, come on, just give us some follow through in one direction. It'd be nice, rather than false breakouts. And that's how I feel about, everything. Like this is a good example of the S&P from yesterday. Breakdown following Powell, false breakdown. And then here we are, getting, the market's just squeezing now. So it's like, that kind of price action is very, very irritating. I'm trying to kind of keep an eye on the longer term picture, and just trying to, mute all of this silliness. But at the same time, it is a little silly at this point, because yields are stronger. And that was a good jobs report. The Fed's the Fed's going to continue to do what they do. And they're not worried about, they're not worried about the tick higher in yields, as Powell said. So maybe the market just takes that as a cue, as, hey, we're going to get more QE despite, or QE, we're going to get some more liquidity despite higher yields. Maybe that's how the market's viewing it. I don't know. Anyway, thank God it's Friday, right? That's all I have to say, is thank goodness it's Friday. Okay, so let's talk about where resistance will be for the S&P. I'm assuming 3840. Should we make it up there? Because this is what's here. Let me remove this really quick. This is what's keeping, lower highs, lower lows. So, as long as we stay below roughly 3840, I'm just going to write 3840. I still say we're in a big range right now, but obviously now support is going to be at 3720. That's it. It's a big range, but that seems to be the range. Okay. Let's go back to currencies. So the euro is trading really heavy today. It really is. We notice we're below 1950 and still below 1950. Despite the rally and risk, the euro is trading heavy. We got to keep that in mind. I know, people are getting all excited about, oh, look at the stock market, reversed, and, here comes gold and blah, blah, blah. I get all that, but, the euro is still trading really heavy at this moment. That's not saying that it's going to continue, but it is. So, it is staying heavy. So, let's take a look at a little bit longer term. Let's go out here and let's take this low here to the high. Okay, so what the euro just found is the 618 retracement at 118.90. So that's going to be really important. Okay. That's going to be a really important support. 118.90. Big time. I don't want to put us bearish yet because I'd like to see where the euro closes. I think if the euro closes below 119.50, euro bulls have a problem. I mean, remember, there's still a lot of time left. There's a lot of time left in the day. There is. Don't forget about those weekly charts from last week. Don't forget about all that. I know it's easy to get caught up in the moment with the market action, but don't forget about all the weekly charts and how gross they were, right? I mean, it's easy to do, but try not to lose sight of that. Okay. Resistance today. I think resistance is going to be back at 120. Should we get up there? I know it's giving you guys a lot of wiggle room here, but I'm thinking that any move back up to 120 is going to find some sellers. Okay. Cable. So cable did not break 137.50. This is obviously really, really critical. 137.50. Resistance today. Hold on. Right there. Okay. Let me remove that. Spike high, spike high, spike high. 139, roughly 139.50. I mean, we're smack dab in the middle right now, so I don't necessarily want to put it on bullish. I'm going to leave it the way it is right now. I know since we're still above 137.50, I should probably put it in bullish, but man, I don't know. Aussie. Okay. Bear flag. We just hit this basically a 78% retracement and held it. So that means dips back here. Well, let me check something else really quick before I get too crazy. Shoot. That was a 38% retracement. Okay. I covered some of the my Aussie down here at 30 something from my shorts that are above that are up here. I mean, we held the 38% retracement. That means this 76.30 is huge. Huge support. And I know everybody's going to trade off of that, meaning that, if we get another dip down here, everybody's going to get long. And that means if we get a dip down here and then we break, it's going to trip a lot of stops. I think people are going to be trading against that 38% retracement now. And I wish I would have saw it earlier. I didn't, I didn't have that on my screen, and I wish I would have. That was a mistake on my part because I would have covered everything. Should I have seen that? And I didn't. Damn it. That doesn't mean anything. I look at the Aussie longer term. From an intraday perspective, I would have covered up all my Aussie shorts knowing that was a 38% retracement. I still look at this as being a big false breakout. So just because we're, as long as we stay below like this, 78 and change, I just expect that the Aussie is going to eventually trade down towards, 75 cents, 74 cents longer term. Today's obviously some volatility, but it's non-farm payroll day. That's why. Okay. Did I get everything done? Oh, no, I didn't. So resistance intraday. would say 72.25. 77.25. Excuse me. I'm sorry. Kiwi. Kiwi is also trading heavy. I mean, we just hit the 38% retracement longer term as well in the Kiwi. Right there. So the Aussie and Kiwi both hit the 38% retracement, and we hit horizontal support. Damn. That means that's really important. 71 cents. That is uber duber, hooper scooper important. Okay. Do you guys want to know something? This is ridiculous. I'm gonna tell you something ridiculous. No, never mind. I'm not going to. I'm not. Forget it. 72 cents is going to be resistance on rallies. 72 cents is resistance. So this. Yeah, I didn't want to do that. That delete. Okay. Let's move that back. So the flag pattern got really close to completing there. Really close. 72 cents should be resistance. We were about 30 pips away from completing. Dollar Canadian, still, I mean, this is extremely irritating to me, the Canadian, but I think a lot of this has to do with crude. Crude has been super strong. Obviously right here is 67. I mean, that's going to be some resistance, but until crude backs off, I can't imagine the dollar Canadian is going to make much headway. The resistance up here is the 161% extension of this move comes in. Let me remove that. Comes in at 66.50, roughly 66.60. So just, I guess until we hit there, it's going to have, I mean, the dollar Canadian is just going to have a really tough time getting out of this, the head and shoulder range. So support right now is at 120. Let's just call it 126. Resistance is at 127.50, and that's it. I mean, there's not much to do right now. 126, 127.50. And when I say 126, you guys probably remember from this week was 125. I'll just be more granular here. 125.80. That's going to be important support. That's it. Right? That was from, what is it, yesterday or 2 days ago? Okay, dollar Swiss, 92 cents is support because that's the breakout point. 93 cents is giving us resistance right now, but the 50% retracement is at 93.36. So 93.35 roughly, support 92 cents, and this is bullish, right? Dollar Norway, same deal here. This isn't moving without crude. While crude continues higher, this will not move lower. So, or I'm sorry, the Norwegian krone won't move lower. So 865 is resistance. We went as high as 863 today. And then 845 is support. So it's 845, 865. Markets open. Dollar yen, dollar mex, sorry. 200-day moving average, but we hit the 161% extension, which means that's key. 21.35. I'm still long. I did not take any profits. I should have, but I did not. Unfortunately. My take profits up here at 22, just to let you guys know. So dips back down to 21 should be supported. So 21, 21.35. Bullish. dollar yen, I mean, I'm surprised we're past 108, but you know what? This is one of those situations too that this is the 618 retracement. We might have just taken out all the stops. You think about that if you're trading these yen pairs too, you know, Aussie yen, Canadian yen, New Zealand yen. 108.65. We should be supported back at 108. I'm gonna just, I wouldn't short it. I'm just I think it's extremely bullish. And I mean, like I was saying yesterday, I would like to short the dollar yen. I just don't know where. Like, I don't have any good like ideas of where I should be short that. Right? I just don't know. Okay. Where are we at? Dollar index. So this is really important resistance in my opinion. We just hit the 127% extension, but really the dollar index needs a hold above 91. Let's just call it 91.70. I'll write 91.65. Resistance is at 92.20. And I'm not going to put it on bullish today. I'm just not. But if we close, and I'll tell you guys this right now. If we close above this 92.70 level, I'm going to put it in as bullish next week. And it's going to be bullish from here until we get to about 93 or change, somewhere around there. Okay. So again, I'm not putting it bullish today, but I am on the fence about flipping that to bullish today. It depends what happens by the end of the day. By the end of the day, you know, stocks could come off 2% and the euro trades below 119. And guess what? The dollar index is going to be bullish, right? So gold and silver both bounced today, which makes sense. I mean, if you look at, here, let me pull it up. Where is my DSI? Oh, here's my DSI. So here's DSI. Okay. You look at gold, we're at 12. Okay. So because we're at 12 in gold, I do expect us to start finding some buyers. And remember, this is the chart of the day yesterday. Big 618 retracement. So I'm going to write down support today as being 1690. I do think we can stretch it further, but not today. 1685 support. And while we're below 1760, it's bearish. Now look at silver. I know silver's up today, but is it really up? I mean, it's up, but look at this really quick. Stelios may have something to say about this, but or Steve, but
what's that?
Silver. I mean, look, we've taken out this that trend line's from 2020.
Yeah, we're going lower. We're going lower, I think.
Yeah, I mean, I know it's up right now, and people are all excited because you're seeing these. You're like, ooh, stocks are going up, and dollars are reversing its gains. It's gonna go back down, and you know, gold's going up, silver's gonna go up. I don't know, man. I wouldn't be too really excited about this while we're below 26. So I'm gonna do this while we're below 26 bucks. We're bearish. Now, I think the next stop is 27 or 2450. I'm sorry, 2450. And that's going to be important resistance. We get back above 26 and we get about back above 1760, then I'll take us off of bearish in those. Bitcoin. Last but not least, what the fudge sickle is happening with Bitcoin? Nothing. Okay. 40. Well, I'm just going to write 42 to 52. I think we've been doing that pretty much all week, right? 42K, 52. I'll just do it like that. Okay, range. That's it. We're done.
A range worth 25%.
Isn't
Very
that crazy?
normal.
I mean, that's. I mean, if you're an institution, I mean, how do you? That's why. That's one of these are the whole reasons why. Bitcoin will have a hard time being an actual currency because of the swings. You can't. Could you imagine your balance
First
sheet
of
at a
all, it's
bank?
impossible for it to be a currency. We've already gone through that.
You're right. And then also, like, imagine you're an institution. You're, I don't know, a fund specializing in cryptocurrency at Citibank. That how much money is allocated to you? How much money is allocated to you?
As much as you need. What's the worst thing that can happen? You go bankrupt.
Yeah,
taxpayer is going to bail you out. It's fine.
Funds are going to have a hard time being too big because of the risks associated there. So I don't know. Just some food for thought. Anyway, I need to go. I'm going to run to the restroom. But NASDAQ is coming off. S&P is coming off. Be a little careful here. I know people are super excited about, the dollar's reversing all these gains and blah, blah, blah. But, I wouldn't be so sure. You look at 10-year yields, they're holding their gains. And as long as yields continue to hold up, be really careful about getting too excited going the other direction. So, all right, guys, it is yours. Happy Friday.
Thank you, Blake.
All right.
TGIF.
Thank you, Senor Blaker.
Thanks, guys. And thank you for all your support, everybody listening in. I don't care about Steven Stelios. The rest of you guys, thank you very much for your support.
We don't care about ourselves either.
Thanks, Blake.
See you guys. Bye.
Bye-bye, mate.
Steve, what do you think drove this reversal after the numbers? Was it just extremes in terms of positioning? Like we talked about bonds being very oversold. What do you think?
I really have no idea. I really think it doesn't matter. I mean, intraday and short-term charts, you can get a lot of noise. That's why I'm not trading very short-term, because I can't really decipher what's happening short-term. I mean, I find it like stressing just to even think about it. I mean, there are no real forces I can interpret. Now, do I think that equities are going to hold their gains? I kind of doubt it. I kind of doubt it. We're already seeing that we're paring back the previous gains. I mean,
it's difficult. I can't explain the move, and I don't attempt to actually. But yeah, I think you're right. Equities were like the S&P at some point was up 1.2%, whatever it was, and now it's like
and I think that was not a very smart move. I think this is not the place you should be buying the S&P, at least with what we have at hand at the moment. I think that as long as we trade below this broken wedge, risks are tilted to the downside, and there's a lot of unwinding that can happen here. So I wouldn't want to be in the long side. I'm not saying that it can't work. I'm saying that I don't think it's smart. So against that trend line, I think looking lower makes sense, and looking higher in the dollar makes sense as well. I think that let me show the euro. Euro, for example, is testing the support. I think this is going to be key support for the euro. A breakdown from there clearly opens up a lot more downside for the Euro USD, and a lot more upside for the DXY, since we know very well that they're inversely correlated. Now, when I'm saying a lot more downside, I mean, I didn't really want to exaggerate that much, but I think we can go back to 116. I think it's totally, um, you know, um, likely. So here's USD Swiss as well, by the way, which has already made the move. The reason I wanted to show it is that we know how inversely correlated the two of them are. And just look at USD Swiss that has broken through its equivalent channel and has literally gone vertical, testing the previous high. As we speak, a move above that produces a higher high for the first time after a long period. Just look at this, right? We topped off at April of 2019. So, this 93 area, undoubtedly quite an important one. Now, the reason we're seeing this divergence between the two of them, I mean, the fact that USD Swiss is rebounding much more than the Euro USD is dumping lower, is this move in Euro Swiss. So, we had predicted that in advance, that it's likely to see this type of a move to the upside. We had this triangle, which was a consolidation. So I thought there should be, at least one more push higher before we can have the chance of moving lower. And voila, there it is. This is the move higher. Now, this resistance area at 111.70, I think it's quite an important one. We've already started seeing a little bit of a divergence. Perhaps we're even forming a small ascending wedge here. So I think this is not anymore the area for you to be buying Euro Swiss. I think we might see a pullback from here, especially, if we see risk of conditions persist. I think, there is a decent danger for such a move to the downside. Probably the easy move higher after the breakout of the triangle has already happened. Now, having to do with the metals, I just need to reiterate once again that gold is now testing a key confluence of supports. Now, doesn't really mean that we can't go lower from there, right? Very frequently you get overthrows. There is no question about it. And at the same time we have this divergence with silver. What I'm talking about as a divergence, first of all, silver has broken down below its channel, but on the other hand, it's far away from its previous low, right? So gold is trading at a lower low, clearly. I mean, it has been for several days. Silver still isn't. So that was the easy move lower that we had predicted. Now the question is, where do we bottom? I don't find it very likely that, given the outlook in the dollar at the moment and the outlook in stocks, that we're going to do it here. But from a technical perspective, it is a perfect area. So, I have to stress that out. Now, we break below this 1680 something zone, look towards 1640 as the next area of support. Platinum, as we were saying yesterday, 1770 and the day before, etc. 1770 was the first area of support. That doesn't mean that it would do the trick, right? So we've gone past it. Keep an eye though, because we're retesting again this channel trend line support. So let's see if we can find support here. Otherwise, we're looking at a deeper retracement. My medium to long-term thesis hasn't changed. I think platinum has a lot more to go to the upside. An interesting rebound in the case of copper as well keeps copper within what might be a corrective channel. So if you want to be bullish, risk one asset that can actually give you a little bit of of hope is, copper, because so far copper hasn't done anything really wrong, oppositely from nickel, for example, that sliced through. Nickel is definitely having an impulsive move lower. What that means is that the corrective move is definitely not over, right? So I would expect that nickel has more to go to the downside before it can actually bottom down, right? Something like that, perhaps. Natural gas, nothing. Consolidating above the channel. I still think we might see like another leg lower before higher. And crude, as we said, very, very strong move to the upside. Be careful. Important confluence of resistances up here, roughly at 65.50. Testing this channel's resistance once again, which is also the high back there 1 year plus ago, right? Actually, 14 months ago. And also the high of 2019. So, very, very, very important area of resistance. This is definitely not the area you want to be buying, right? Perhaps, a nice fade for somebody that wants to trade counter trend and doesn't, mind jumping the gun a little bit. Anyhow, questions, guys and gals? Who wants to see what? By the way, DXY touched earlier this resistance area, so I'm not really surprised that we pulled off a little bit. So keep in mind this like 92.20 area is an area of resistance. So, keep that in mind. But I think that we're probably not done yet. Somebody wants to have a look at GDX. There you go. I hope you didn't expect to see something very, very different from gold. I think clearly a very similar corrective move to the downside in the GDX. Look how it's stalled at this key support resistance area. Now, admittedly, after like 5 days of, consolidating, it makes me feel like it will probably have another leg lower to overthrow below that before we can move higher. So keep that in mind. I wouldn't be surprised. I know that this is an important area, and the market tends to be very, very devious. So I wouldn't be surprised if they take out many of the longs there before the market can move higher once again. To be honest, I'm kind of relieved because I actually had remorses that I didn't buy any GDX. I actually wanted to have exposure in the miners as well, other than having physical, and I didn't do it. I was looking for a pullback to do, and I didn't. So now I'm very, very seriously thinking of starting to get some exposure here. I know, as I said before, that it's very likely to see another leg lower, perhaps towards the 61.8 at 27.50. But I don't want to be left without a position. So I'm seriously thinking of buying like a quarter of a position somewhere here, and then buying like a quarter of a position lower, another quarter of a position at 27.50, and then wait and see where I buy another quarter, perhaps after a big reversal higher. You know what I mean? But I want to start getting some exposure. I very strongly believe that GDX sooner rather than later is going to go much higher than the 45.78 high that we saw last summer. Okay, so this is one of the longer term trades that I'm really salivating over. I mean, I feel very, very safe about gaining some exposure here in the miners. And I don't mind holding for a long period of time. I really don't mind at all. I mean, I hope the market doesn't prove that, I'm just, I'm just over optimistic. But it's one of the positions that I wouldn't mind holding and being out of the money. I mean, I kind of feel like it's money in the bank. I think it's an eventuality that miners are going to, that gold is going to move higher, and of course miners are going to benefit along with that. So yeah, I don't mind having a position here. I actually want to. What do you make of all the chatter that gold money is heading to cryptos?
I think we've talked about this in the past, right? I think gold, like long-term investors, are very different to crypto investors, if you want to call them.
I think that there is a very, very limited number of people that are actually investing in gold and are thinking that cryptos is an alternative to that. Now, do I believe that it's taking some money away from gold? Some little money, yes, but not from the long-term investors in gold. Just from people that believe that we're going to have more inflation, and absent of cryptos, they're thinking they would put all their money in precious metals, and now some of them have drunk the Kool-Aid and believe that, you know, cryptos, for example, are also a hedge in inflation, and they're thinking I'm going to diversify that. But people that are actually long-term investors in gold and silver, the vast majority of them I know wouldn't even go near cryptos. Not all of them. There are exceptions, of course, right? So do I think it takes some money out of gold? Yes. Do I think that it's a critical mass of the money that would go to gold? Absolutely not. Absolutely not. That's what I think.
And I agree with that. We've talked about this so many times.
Yeah. And personally, I mean, the attributes that gold offers, being, you know, whoever is trying to persuade you that you can make money trading cryptos, it's not difficult to do so. I mean, yes, you can make money or lose money trading cryptos. You can make a lot of money or lose a lot of money trading cryptos. But those that are trying to persuade you that you should actually be buying cryptos because they are like store of value that can oscillate like 25% within a day or within a week, that can be cut in half, and people that own it think it's normal. What kind of store of value is that? What kind of a hedge against inflation is that? And how do they know it's a hedge against inflation? We've never had cryptos in a period that we actually had high reported inflation. So all that is BS. Cryptos, you can trade them, you can make a lot of money trading them, but they are the riskiest of risk assets. End of story. I mean, in my opinion, if there is one thing that's not non-debatable with cryptocurrencies, is that they're extremely risky assets. Full stop. I mean, that's it. It's as simple as that. And it's simple to mathematically prove. Just measure volatility. I mean, is there a better measure to risk than volatility itself? I mean, you know, that's it. Nothing more to say. Market cap of gold is over 10 trillion versus Bitcoin now less than 1 trillion. Yeah, Jane, that's true. But to be honest, I don't even care about the market cap. I don't think that looking at market capitalization is a proper measure when comparing the two of them. Somebody, let me see. Was that in the chat room? Somebody asking a question. Let me see.
Yes,
Yeah,
it was in the chat
Irina.
room, yeah.
But don't you think that gold was rising for so many years during 2016 because the yields were on downward trend, and now this yield curve is reversing? So it may happen that for gold doesn't care about the yields at all. Never did.
Only in the short term. I've said this so many times. Yeah.
Yeah, only the short term, and even more so, gold doesn't care about nominal yields. And in my opinion, the general trend that real yields are moving lower hasn't changed. So yeah, a lot of people of Bloomberg have been saying that Bitcoin is the new gold, if that means anything. Yeah, CNBC is touting it all the time as well. What do I believe about them? I believe that they're the usual people that were helping people load up on internet stocks in 99 2000. I believe that the vast majority of the shows on all these channels are for amateurs, and more or less what they do is that in hindsight, they're trying to explain what has already happened and nothing more than that. Personally, I never watch any of these channels. If I had time, I would watch them as comedy shows, the vast majority of them. And I think a lot, and it also annoys me that in the vast majority of the cases, they don't even bring people to debate both sides of the coin. I mean, try to find a cryptocurrency skeptic on CNBC. It's almost impossible to do so. Almost every person they bring on CNBC is either neutral or extremely bullish on cryptocurrencies. You think there isn't anybody bearish so they can bring for an actual debate, but they don't.
Well, there is a Real Rubini, right?
Yeah.
And what was I going to say? And
what is your preference,
Nassim
GDX
Taleb.
or gold, and why? I've said it before.
Yeah.
GDX is in essence a leveraged play on gold. So it depends on how you want to trade gold. Do you want to be somewhat more leveraged? On the other hand, there is something else to consider. Dividends, right? So very similar, but different in many aspects, right? I own physical gold, and as I said, I now want to get some exposure in GDX as well. It has a little bit of a different attribute, but keep in mind that there is absolutely no chance that those two will be diverging. There's absolutely no chance that gold is going to be getting destroyed and GDX is going to be moving higher, or vice versa, right? That gold is going to be moving higher and GDX is going to be getting destroyed. So in essence, it's somewhat the same trade with a different beta. That's what it is. Exactly. Go ahead, Stelio.
I was going to say, it's exactly that. It's more leverage, and it's basically you take a view on miners, whether it's GDX or SIL for silver. You take a view on equities in general as well. So it's like my preference is I get long a gold or a silver ETF if I want to get buy an ETF, or if stocks are at low levels, I get long miners. But obviously, at these levels, stocks are not at low levels. So, I will wait to buy miners when we get a correction, proper correction.
Speaking of SIL, Stelio, that was the easy buy down there. Here, this flag was beautiful. Look at this formation. Just compare the move higher with this move, right?
Yeah.
I mean, clearly corrective, if you ask me. So it's a matter of time for this to find a low as well, in my opinion. Perhaps it can produce a lower low, then higher. Let's also fib this, since we're talking about it. Let's see, 50, 38, there we go. You see, we stopped at 38%. We almost retested 38%. We almost retested again 38%. Look how it's holding. It's holding like a champ so far. So yeah, I think, these corrections have already had a healthy amount of time to unfold. I'm not saying they're going to be done this week. I'm not saying they're going to be done today. But I strongly believe that these corrective moves in gold, silvers, gold miners, silver miners are much closer to their end than to their beginning. I think we're getting there. Wait, we got some data. Let me see what it is. Nothing. Okay. Canadian IVP MI 60. Okay. Well, whatever. Okay. Any more questions before we wrap up the week? Guys, girls, anybody else? Going once. Going twice. Shortcut yen from the FA resistance. Come on now. Drop like a rock. Says Richard, platinum. I did cover platinum, mate. I did cover platinum. It's still in a corrective move lower. Somebody mentioned in the chat room the CAD yen. So let's have a look at that and finish up with this. So CAD yen. I mentioned a long time ago that 82 was a key resistance area, that if we broke above it, we could see an extension towards the top of this long term channel. And as you see, we're getting closer and closer to that. So we do have more upside potentially, but the closer we get to 87, the more you should be careful because we might find resistance there, even if it proves to be shorter term, right? So keep that in mind. What's that, Didier? Pass? What is it? What's the ticker, mate?
It's a silver company, Pan American.
Okay. Let's have a look at it. You see. I mean,
same correction, right? Yeah, it's fantastic.
Yeah. It's like seeing the silver miners. It's or almost, it's one of the same. Instead of buying pass or whatever, unless you're a real expert and you've done your due diligence, I think it's a much better idea buying, the basket of the miners, because in essence it removes, specific company risk, right? So in my opinion, yeah.
Man, all these charts just show what a great buy it was at the COVID crash, right?
Yeah. And in my opinion, Stelio, looking forward in a few weeks, it will be showing what a good buy it would have been buying after all these consolidations, when the price action was clearly saying that the trend remains higher, and this is just a healthy correction to the previous vertical move to the upside.
Yeah.
We'll be here and we will revisit it.
Yes.
Yeah, because I think when they break higher, I think they're going to go vertical once again, and people are going to be trying to enter by waiting for a pullback, and something tells me that they're not going to be getting a pullback again for a long period of time.
I agree, man. Okay, well, thank you, Steve. That was
SILJ.
It's junior silver miners.
Yeah.
I look at that quite a lot, actually.
Yeah.
It's very volatile.
If you notice, it is interesting. If you notice, SILJ looks more like silver than SIL. Right? I mean, we have this divergence more prominently, this one. But it's the same thing. I mean, I think that in any case, we have corrective moves here, undoubtedly. It's a matter of time before all of this continue to the upside, right? I think that high back there in 2013, it's a matter of time for us to test it and take it out, because I think it's a matter of time for silver to actually, hit 50, and this time, not form a triple top, because we've already had like a double top at 50, but actually, head to new all-time highs, along with more or less everything that has real value, anything that has intrinsic value. Somebody's asking for the Chinese yuan as well. Whoop, misspelled. SNH. There we go. So important breakout. We talked about that some time ago, right? So I think an important corrective move is starting here as well. Now, look at this. I'm just showing you the big picture because I do think that this move higher is going to be corrective. Okay. So we've now started. I don't know how much we can go, but I believe that at some point we have a lot of interesting areas of resistance. We're going to find resistance and roll over once again and move lower. Okay. So I think this likely has more upside because, we have already made a big move to the downside, and it needs to be properly retraced. 660 is an area of interest. 671 is another area of interest. But I think that eventually we're finding resistance somewhere there. and then rolling over and moving to new lows. So have a wonderful weekend, Stelio, and everybody else.
Thank you,
Bye-bye.
everybody. Thank you. Have a good weekend.